And we're live.
Hey everybody, welcome. It is Monday, March something. Ivan and I have been asked by the streams to put together a Momentum Monday, and today would be a good day with Facebook getting pummeled and a lot of news and a lot of chart action. Say hello to Ivan.
Hey guys.
Ivan.
As you can see, I'm growing a beard. I'm not shaving until Facebook hits all-time highs again.
Yeah, well, that is a dangerous bet. You want to take that back right now?
Of course, yeah. I am.
Yeah, you did not mean that. That could be a while based on the price action today. But we can go into that in a few minutes. I'm in Phoenix. Ivan, you're in San Diego?
Yeah.
Sunny day there, sunny day here. We finally have gotten rid of your weather. So let's dive into it. I think the story of the day for the NASDAQ will be Facebook. The markets are not closed. It's Monday afternoon here. But let's go to the charts.
Okay, let me share my screen.
Let's talk some momentum or lack thereof.
Yeah. And we're going to, can you see my screen?
Yeah, that's the NASDAQ.
So the NASDAQ down almost 3%. And I just want to remind people that in the weeks just before the tax deadline, which is this year is April 17th, it's normal to see like a minor sell-off, especially after a super strong year like we had last year. It's completely normal to see a pullback, especially in the most popular names like Facebook, Netflix, Nvidia, the names that everyone has been holding, just because people need to raise some money to pay their tax obligations. So this is something that we see every year, especially after a strong previous year. So, I mean, it's not super unexpected that we're currently seeing a pullback.
Yeah, let's go back. Let's spread that out a little bit.
Okay, let's go back to the Qs. So do you want a weekly?
Uptrend. I think the thing that I don't like about this, but it's in this current sell-off is, everybody's still pretty bullish from the charts that I look at. You had Apple, you had Amazon, you had Google, you had Netflix just screaming, and Apple just had taken out all-time highs, only to reverse. And it was getting pretty thin in terms of what was working in terms of enterprise stocks, and we can tap into that a little bit. So I would buy strength, not weakness quite yet. That's the way I'm looking at this pullback. If there's such a great run, I'd rather buy strength. And I don't know. So I want the market to prove, even though we're in an uptrend, because the gains have been so good, the first thing I want to get off my chest here is I want the market to the leaders to reprove themselves, because we took out these all-time highs in the NASDAQ and quickly reversed. And, it may only be a week, but there's no reason to be a hero in what I say is no man's land after all these great gains. So, okay, so seeing that, let's go to Facebook, because that's the story. And who cares about the news, as I'll say? Let's talk about Facebook, the company. They are now going to be the poster boy for regulation. So if we squeeze in a little bit on that, I will last just to the year or 6 months. You can see chop soup for 6 months, Ivan?
Yeah, you can say so, yeah, even more.
So
8 months, yeah.
We're seeing a couple things. First, we're seeing that the advertising business alone, no matter how great Facebook is, it's just part of that conundrum. The market likes subscription business. If you pull up Adobe, ADBE, you pull up any enterprise stock, including Google, which is an enterprise stock at many levels, they've done much better than Facebook over the last 8 months. But as I've been talking about with Ivan, from Okta to Mule, all these enterprise stocks are doing well because the government is giving tax breaks to corporations, and other than small payments to employees, they're going to spend that money upgrading their software and selling software and buying software. And that's really, you can see the moves since the tax breaks have been, a lot of gaps and most of the upside. But enterprise stocks are extremely highly valued here and priced for perfection. And you know, I don't know what's going to take this market higher. So, I mean, that's, you know, on Facebook, we can argue, going back to Facebook, we can argue, you know, to me, I'm not going to politicize this other than the fact that it's scary that we're giving Trump a reason to regulate tech, or these dumb old politicians another reason to regulate tech, which it just seems like it's inevitable based on the price action of Facebook today. So I think you got to give this room this market a little room to prove itself. Let's go look at Twitter. One thing that's interesting is the relative strength of Twitter. I don't know what it's doing today.
Sure. So real quick on Facebook, like, I mean, the silver lining here is that while it's been chopping sideways, its fundamentals continue to improve. So basically the fundamentals are catching up with the price, which has been a leading indicator in the past few years.
Yeah.
So we can go back to Twitter and we can compare it to Facebook real quick.
You can see here is Twitter, and it's closing the gap the last year on Facebook, but still just a fraction of the valuation of Facebook. I think working in Twitter's favor is the fact that news and politicians, this seems to be the cycle we've been in for the last 2 years, has benefited Twitter more than Facebook. It's much easier for people to give up users, not new users. I have no idea on the metrics, but it's much easier for users of Facebook, in my opinion, to give up Facebook than it is for people who've been using Twitter for a long time to give up Twitter. And the other thing is Facebook in this era of potential regulation, Twitter doesn't know much about you because they've done such a poor job of with their API all around, that in an era where, you know, having this data changes from being a great thing to being something to worry about, Twitter doesn't know much. They could know a lot, but they just don't know that much. And their spam problems are known to everybody. So again, relatively, I think Twitter should hold up. I am long Twitter, obviously been long, but I don't own Facebook, never haven't in a long time. But that's what I see on those two. That seems interesting to me. Not that I would chase Twitter up here, you know, but on pullbacks, it'll be interesting how Twitter behaves. Twitter's coming into this long-term resistance. It's another reason I don't think you need to be rushing to buy Twitter here. It's just coming into that mess of when 3 years during it was public. And you know, you're coming into this overhead resistance here in the 38, 37 area. So that's Twitter. Let's go to what's actually working the best, Ivan, on your list.
I mean, this week, nothing's really working. I mean, the whole list is pulling back. But over the past month and a half, we've seen some amazing appreciation in so many stocks.
Yeah. Shopify, which we're long, has had a great run. Well, anything e-commerce and subscription based, looks like a lot of Chinese companies, Ivan, too.
Yeah, a lot of Chinese companies, they continue to hold extremely well, and they continue to report, you know, incredible earnings.
Let's scroll down that list. So we've got NVIDIA at the top, which is benefits from whether Bitcoin's going up or going down, to be honest, because they're selling chips, they're selling picks and shovels. You can see a lot of enterprise stock. Atlassian, which makes HipChat, Team, which is just, I missed it, but it's been a great stock. But you see a lot of from Zendesk to MuleSoft to Okta, Skyworks, probably Salesforce, and just tons of enterprise software. And it just makes sense, as we've been talking about on Momentum Mondays, because of the tax breaks. What else stands out? Domino's, obviously, is a restaurant.
Domino's, yeah, let's pull it up. Yeah, compared to
it's really I missed this. It's really a technology play.
Compared to the other
Starbucks gets all the press about their app and everything, but Domino's really owns the millennials. I think, let's pull up Starbucks. I kind of gave up on it, but I'm kind of...
So real quick, look at Domino's vs Papa John's. Like an incredible divergence in the past.
Yeah, and Domino's is just going to, because of technology and brand, I wouldn't own Domino's. I wouldn't own the weaker one. With restaurants, I'm trying to own the strongest. Here's Starbucks. Marking time. You know, they've got the young people addicted. I'm just disappointed with that. I think McDonald's has really kind of stolen a lot of thunder from Starbucks. And, you know, there's no competition in the pizza category, and combine Domino's millennial attack with their mobile and technology and logistics. You know, I just miss Domino's, but that's been the one. Okay, let's go back to your list, Ivan. Anything on your end stand out? Obviously, in a weak day today, like what are you looking at?
There's a few biotech stocks are really standing out. You can see this one, AL.
Yeah.
And Y is looking good on about weekly and a daily, but in this market, it will probably need some time to consolidate. Like a lower priced one that is standing out today.
Wow, beautiful rounding.
Relative strength.
Yeah.
Jazz is also one. It's been a chop for the past year and a half, but it's.
If we pull up microcaps, so microcaps, IWC.
Trying to break up. Okay, IWC.
So it's basically risk is still on. It's pulling back today, but you know, we've gone out. Money's flown out of crypto and certain areas of the market on big cap, but flown into microcaps. So stock pickers market. I think it's this. You know.
All right, not this. All right, let's go to a daily on Ethereum then.
Yeah, I've been adding some here, 500, 600. Let's go to yeah, it's messy. I mean, obviously, we're in a bear market.
Okay, here's a weekly.
But it's amazing the stock's down 60%, still in a long-term uptrend. You know, it's hard for me not to own this when I was selling it at 1,000, 1,100, 1,200. So I'm bullish. I think, to me, Ethereum makes more sense than Bitcoin because no one's spending these anyways. And Ethereum's the building blocks for a lot more activity in the space. So Ethereum really needs to work for this, or something really new has to come out really fast here in this bear market, or there's just going to be tremendous bloodshed. I'm staying really focused on Ethereum right now because I've made a lot of money there on the upside. And most hedge funds in this space that I talk to, that's the #1 bullish company that they're focused on. And the industry needs Ethereum to work. Bitcoin people just were more hodling to joke and not really understanding the tech, just kind of holding it because they thought the price would go higher. If we pull up Bitcoin, you can just see.
I think most people that own Bitcoin look at it as a digital gold, just because its supply is limited.
Well, they don't know why they own it. They don't really know why they own it. With all the forks and fighting and just not bullish on Bitcoin. I own some, but you know, if it goes up, great. I'm thrilled. I'm not adding here, and so we're at a critical junction. This is a bear market. You know, it's still in a massive uptrend though. So we'll just see how long this goes on for. You know, but people aren't transacting. You got President today, Trump, saying no crypto from Venezuela. And, you know, I'll take cap tables and cash flows. So I'm really not focusing on crypto. So let's go back to your list, Ivan. We'll end there. Keep it short today. So I don't think anything's going to change here. We need these leaders to continue to step up. It's a good, broad base, cash flowing, cash cow growth companies on this list. They're expensive. So if the market, you know, if the beta of the market increases, the volatility increases, these will be very volatile. So I don't think you have to be a hero in this tape, but fish from this market wisdom list that Ivan puts together. Anything else, Ivan?
Yeah, now it's definitely not the time to be super aggressive in the market. Even though if we assume that we are still in an uptrend, like a little pullback is actually positive to put new money to work, but then you actually need to see like good risk to reward setups, not to just blindly buy any dip. And as I said, I do expect like a pullback in the weeks just before the tax deadline. It's just something supernatural to see, not unexpected. But eventually, I think that pullback will be a buying opportunity. But of course, we'll see what the market shows.
I'm with you. There's no reason to panic, but at the same time, it's pretty, you know, it's pretty bullish out there. Forgetting headlines, it's still pretty bullish. You know, everybody's pretty invested that wants to invest. Sure, there's new money flowing in, but I don't trust that new money flowing in. That's probably just like happening in crypto. I think that new money will get flushed out. I'm going to keep an eye on the small caps because I think in a stock pickers market, if this money really comes out of the market, it'll come out of the small caps as well in a violent way. So, you know, we were teased a few times here at all-time highs, and then the micro caps, you know, as a further sign of risk on. I think there's probably a lot of biotechs in the micro cap and banks. So,
yeah, as you can see, this is the small cap, the Russell 2000. It's been holding its 50-week moving average. Like
yeah,
buyers,
there's no reason to panic. I don't think you need to leverage up here. I think you can just buy strength. You know, we're in the trending market, so you don't have to buy weakness. Wait, you know, buy strength. Okay, buddy. Let's. I feel let's wrap.
Just a second. Okay, stop.